Hello again, everyone. It's Vince Vaughn from TradeWinds.com, and this is our update for January 29th, 2017. Let's take a quick look at how the markets finished off last week. Well, we had another low-range session on Friday and a bit of a mixed close. The Dow was down 7 points, while the S&P 500 was down just 2. The Nasdaq was actually up 5.5 points, and the Russell was down about 5 points. Now, the important thing here is that if you look at this, we had this breakout out of this sideways range here after almost 2 months of sideways action. We finally had a breakout last week. The follow through though wasn't very strong. So when you look at a chart like this, it kind of makes you question that breakout. Now, when it comes to judging market direction, it is very important that you use multiple time frames, and this is a classic example. If you're looking at the daily charts of the Dow, the S&P, the Nasdaq, and especially if you're looking at the Russell, it doesn't look all that encouraging, does it? I mean, sure, we had a breakout and it looks like we're going higher, but not much momentum behind this move. But if we look at the weekly charts, they look much different. We have nice, strong momentum. We just had a few weeks of a pause here, and now we have this bullish engulfing pattern. Let me zoom in and highlight that for you right here, which should really kick off the next move. And the important thing is that we get a trade above last week's high. If we do so, we should be off and running here. If we look at the S&P 500, same exact pattern in place. Looking at the Nasdaq, same exact pattern. In fact, this one just continues to run higher. And looking at the Russell, we're still in a bit of a pullback. We certainly made up some ground last week. And more importantly, look at that momentum. Look at the slope on that 20, much, much stronger. So it is always very important to look at multiple time frames when judging market direction. If we look at the monthlies on these charts, they all look pretty positive, all have momentum to the upside. So it all looks pretty good. Let's continue on and have a look at bonds last week. It was up 43 cents here on TLT, while gold was up just a $1.20 or so. Although it did put in this bullish engulfing pattern here right around the 20. So this is important. This is something to make a note of, and obviously mark the high, Friday's high here. If we get a trade above that, we could be at a minimum headed back towards these highs before a continuation of this move even higher. And crude last week, finishing off the week with a loss of about 61 cents at the close here. Now, before I let you go, one other thing. For those of you who trade Forex, here's the next dollar that I think is about to make a move, and that is the Aussie. And if we look at the Aussie, we can look at it across many different pairs. You look at the CAD, and it's getting a nice bounce off that 20 with momentum on its side. If we look at the Aussie and compare it to the Swiss franc, here, let me try that one more time here. Let's put in the Swiss franc and have a look. It's got the exact same pattern with momentum behind that move. Let's look at it across a couple of other currencies, the Japanese yen here, and it's on the move towards these highs with momentum. Let's have a look at a couple more. If we look at it against the Singapore dollar, there it is, off and running. And even the US dollar here. Let's look at the USD against the Aussie, and you can see sharp momentum behind this move. We may have a bit more of a pullback here against the US dollar, but overall, the Aussie looks like it's the next in play here for a move higher. Okay, that's about it for now. Enjoy the rest of your day, and we will see you on our next update.